Hello friends, this is your host Rakesh Kumar with yet another video. This is a quick video about the examples of the inverted cup and handle formation which we had just discussed in the previous video, and I'm expecting some questions from you guys in the comment section about the pattern, because I find it is not that easy to understand this pattern. And before I start the video, I just wanted to remind you that if you have not subscribed to our channel yet, then you can subscribe to it now and get the notifications of the latest video uploads. And if you find this video useful for you, then please consider pressing the like button which is below the video. But before we begin, let us have a look at the risk disclaimer. It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk, the losses can exceed the investment. The information is provided as is, and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started. To start this session, first of all I want to show you the chart of the euro dollar single day chart. And can you identify the pattern which we had discussed? Okay, I will show you the pattern that we had discussed. So this is the pattern that we had discussed in the previous session, that is the inverted inverted cup and handle. It is an inverted cup and handle. Now do you see the inverted cup and handle anywhere in this one? Okay friends, just for the ease out, this portion here is an inverted cup and this one is the handle of that cup. Now I'm sorry about the drawing, but yes, this is how it looks like. Okay, this is cup and this is handle. This is how you have to identify the pattern in the real market. So but in the real market, the cups are not exactly as I have made. In the real world, the cup would have been like this and handle would have been like this. But you see, we are not in an ideal world. So this is how the pattern is. Actually the price is falling down, then it starts rising up, then it starts falling down again from here, then it breaks, so this is the actual pattern if it would have been existed in the real world. In this case, this was the cup after making a low here, then this was a handle, and then this was a break. Same thing I have tried to explain, that there was a downtrend. It made a low here, then it started advance to the upside, made a high here, then started a decline here. We joined these two lows, we made a neckline, the price advanced for a little while here and made a handle, then break below eventually, and then tried to retest this level again, and we sold it here with a small stop loss higher and take profit level equal to the height of the pattern, which is measured from the second low to the height of the highs that was made during the advance. So now this is what we are going to identify in the euro US dollar chart here. Can you identify the pattern here? Okay friends, for your ease I will just show you that there was a trend here which was a downtrend. The price was making lower highs and lower lows. This was a high, this was another high, this was a low, and this was a lower low. Now this entire area actually can be considered as a low, because this was an area of support. Now from here the price started an advance to the upside. If you see carefully, the price started an advance to the upside, and we will mark it like this. The price started advance and then it started decline. Okay friends, so the high that price made during that time was this was the high, this was the highest high during the decline, during the advance. Okay, this was the highest high, and after that it started the decline, and the price came to the level of this previous low at around this area. Now if we have to make a neckline, then how we are going to make a neckline? We are going to use a ray line. We will keep it here and join this low here. Fair enough. So we have made a neckline, but where is our cup? Friends, our cup is this one. This one is our cup. Okay, and where is the handle? Now the next advance from here, this one forms the handle. Now if you look at from a far distance, then you will clearly make out that this is a cup and this is a handle formation. But this handle broke here on 9th of April. So after the break here, the price went for a retest of this neckline around here. Okay, this retest was the area to sell this pair with a small stop loss higher than this area here. Okay, and take profit target which was equal to the height of the pattern, and the height of the pattern is the highest high and this next high, and this we have to measure from the breaking point. So this was our target. In this case the target was approximately 1.2074, which was achieved after 2 to 3 months, and that's it. This is how you have to identify the pattern. It is hidden in your charts only. So in the first hand, could you identify this pattern? No, but with the experience, with your good eyes, you will be able to identify them in the near future. So let us see the next example. Okay, here I have already marked, so you cannot say, but still, can you identify? If you can identify the pattern on your own, then you are very good at it, and yes, you have learned how to trade or to identify the pattern at least. Okay, so I will try and explain this one here. So here the pattern was in a downtrend first. The pattern was in a downtrend. It was making lower highs and lower lows. Then from here, the pattern started an advance. And made a high somewhere here and made a broadening top. Okay, and then started a decline and it came to this level. So friends, this became our cup, you see, or a saucer till this place. Then we took a ray line and joined this low with the low that we are from where we started this pattern, and we got a neckline. Now see in this case how the neckline is declining. The neckline is declining. Now declining neckline is very bearish in nature. From this neckline the price started rising higher and it gave us a handle. Okay, now this handle was broken. The price never retested it, or you can say it tested on the very next day. Now I'm sorry, if you see, I will switch it to 4 hours if possible. Let us see if we can get the same place. Still loading the data. Okay, from the daily chart only I can tell you that after a break, very next day the price started an advance and tried to retest this level and then fell off suddenly. That's why I was saying that the declining necklines are very bearish in nature. So the retest of this line made a very good opportunity for the sellers to jump in and sell this market. So now this becomes our handle, this becomes a break, this becomes a retest, and this is what was expected. So what was the target in this place from the high to the second low, and then we clone it and then we pull it from the breaking point, and that becomes our easy target. Okay, 123.71 was the target in this case. So friends, it is easier said than done, but identifying the pattern and then trading them nicely is a very technically it is a job, or it is a very difficult skill, I must say. You have to identify and execute it in the right time. So I'll say in the next coming videos I'll try to explain you how to execute the trades so that you get good risk to reward ratios, and I will also try to show you some single candlestick patterns or double candlestick patterns, and the candlestick patterns that occurs in the form of three candles, like three little soldiers, three white soldiers, something like that. And before I finish this video, I just wanted to tell you that before you open any trade, please adjust your position sizes in such a way that you should not lose more than 1% if you hit your stop loss. Okay, and you should trade only and only if you think that the potential risk to reward ratio is more than 3. And since you have been watching my videos where I am discussing about the candlestick patterns, chart patterns, in the chart patterns most of the times you already know where are your probable targets, where are the resistances, so you already know whether you are going to get 3 times whatever you have risked or not. And if you are thinking that no, the potential profits are less than the 3 times that I am risking, you should not enter the trade. With this note, I'll finish up this video. We'll see you in the next video. Thank you very much for watching this.